Hello, everybody. Gbenga Olatunji here. Why close the accounting books is what we want to be looking at today. Why close the accounting books? And also, we are going to look at the checklist that could make it easier for us when closing the accounting books. Naturally, accounts must be closed, but why? So that is what we are going to learn first of all in this video. Then what are the advantages of closing accounting records? Then how should we go about closing accounting records? These are the items on the list that we want to look at, and if you have any question maybe during and after this video, you can always reach us on the displayed email, or you comment and like the James Associate channel, subscribe to us. Please don't forget to subscribe, because you are encouraging us when you subscribe, and also you are giving the opportunity to others around you so we can easily reach them. So let us go into the video. Why do we usually close the accounting records? It is important for us to know that not every organization that existed last year or last month will still be in existence today. So whether they are in existence or not, accounts should be closed, and this is one of the reasons we usually have some organization that will close their accounts on monthly basis. So accounts can be closed on monthly basis or on yearly basis. Why is the first question. Do we close accounting books? We close accounting books especially for the year-end closure, because we do not want rollover of profit or loss, as the case may be, from the previous accounting period into the current accounting period. When that happens, it exaggerates our business operations, whether we are making profit or otherwise. So the profit or the loss of each accounting period should be limited and be recognized in the accounts in which the loss was made or the profit was made. So this is an important reason accounts must be closed yearly too, or monthly. Some organizations, big multinationals, close their books on monthly basis so that they can prevent rollover of profit or loss, so that they can easily be able to recognize and pull together their accounts. So the next question we want to deal with are, what are the advantages of closing the accounting books? What are the advantages of closing the accounting books? Ultimately, we close the accounting books and we derive the advantage to help us in following the trend of our business, the correlation in our financials, the variables in our businesses, so that we can make informed forecasts and budget, especially in a new year like this, or in a new month like this, as the case may be. So that is the ultimate advantage of closing. It helps us to see our business clearer, to be able to map out the trend, to be able to follow the trend, forecast, make budget, as the case may be. This positions us and repositions us, as the case may be, for strategic planning. And we cannot overemphasize strategic planning and decision making in the coming month, or in the coming year, or in the new year, or in the new month, as the case may be. So this is a great advantage when we close accounts. Also, when we close accounts, we have another advantage, or many advantages, which I'm going to mention just but a few of them. It helps us to be able to compare the financial metrics of the previous year, of the previous month, with the coming one. Let us answer our third question that we started with, that we are going to answer in this video, and which is the checklist. What are the list of things or items when we want to close a book of accounts? We must ensure the reconciliation of cash and cash equivalent balances. So our cash books must all be closed, and we must lift their balances to where they should be. I want to believe we know where the balances must be lifted to. The trial balance. Okay? Also, when we close accounts, we must ensure that all customers, revenues, invoices have been booked and are complete. All the invoices generated for the year must be accounted for. So, if there is a transaction that is happening, let's say for example today is the 31st of December any year, that transaction is happening as we are about to close our door. We need to ensure that we record that invoice or that transaction and ensure it's part of the account for that year or for that month, as the case may be. I hope we understand that. So all invoices must be in. Also, we must ensure payment receipts from customers have been accurately applied to invoices. Don't forget, we mentioned invoices being booked. Now we need to ensure we match all payments received against our invoices. If not, we are going to have debts that are exaggerated. That is, customer might have paid because we did not match the payments, all the payments in particular, to invoices. Then we have debt figures that do not exist. So it must not be by the time we are closing. We must ensure this on our checklist. Also, we must ensure that accruals, what are accruals? Accruals are spendings. Accruals are obligations. I think for better word, obligations towards what we've enjoyed. So an organization has served our organization. We've purchased something from an organization, a vendor, and we are yet to pay. Or we anticipated that we are going to make payment on a particular item. We need to accrue for them, even though they are yet to be paid. But their payments, and we've enjoyed them in the year we are accounting for. So we must close them up with the year under review. We must ensure all vendors and procurement invoices have been booked and are complete. I've said that earlier. We must ensure that all payments made to settle the liability now, or the accrue, as the case may be, have been completely applied to the bill received from our vendor now. we've spoken about the credit side. Now we are talking about the debit side. Also, our inventory, especially for organizations with large volume of stock and inventory, we must ensure that our inventory book balances are reconciled with the physical inventory. So that means before we can close our books, accounting books, we must do stock count. So stock count should be on our checklist too. Then we'll be able to reconcile our physical inventory with what we have in the book, whether they agree or not. Fixed asset register also, we must ensure that all existing assets at the particular time, let's say end year or end of the month, are accurately recorded and they are physically verified. Also, we must ensure proper accrual have been made for withholding taxes and all relevant taxes as it may be applicable in your country. We must ensure we accurately close up the year as regards taxation. From GJAMES Associate Channel, this is Gbenga Olatunji FCA. If you are yet to subscribe, please, maybe you are just joining us, we would love that you subscribe so that you encourage us and at the same time push forward the channel to reach other people. We are value to life. We are value to your business.